Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. A third week, last week, of relative calm after the gyrations of March. The market still had a small gap left over topside from the action from 3 weeks ago between 34,490 and 34,500. Indeed, prices seemed happy for the moment to stay there in between the very recent 50% Fibonacci line at 33,860, that was overhead, and the 61.8% Fibonacci line at 32,250 of the same move, that was below. Meanwhile, I also had the 50% Fibonacci line of the 2020 to date move in amongst the mix at 32,945, acting, it seems, more as an attractor. Then today came along and we had a gapping higher open over the 50% Fibonacci line at 33,860, filling in that gap above the market between 34,990 and 34,500. Our prices have seemingly failed to maintain the levels initially promised, filling that gap, but not even testing the next overhead resistance at the lesser Fibonacci lines at 35,475 and 35,760. We've since seen prices move back down below the 50% Fibonacci line at 33,860 and looking a bit like a large, indecisive, spinning top right now. So, what may be next? Well, it seems there is a marked reluctance to move prices down to the next support area that starts with the April 2011 high at 27,955 and stretches down to the late March low at 27,020. At the same time, attempts higher have been tempered, if not blocked, by the 50% Fibonacci line at 33,860, with still no consecutive closes over this level. And each time it has been tested and breached, at least over recent weeks, we've seen an abrupt move lower in the next session, so watch out for that tomorrow, just in case. However, all this being said, nothing stays the same forever, and we now have the rising short-medium moving average, currently at 28,710, entering the frame from below, with the medium moving average, currently 25,020, also moving higher, though obviously at a slower pace. Short-medium moving average may take a few weeks to get up where the market is currently sitting, but this might well be a trigger event, so watch out. LME 3-month zinc. Now recently I chose to take a step back and look at the monthly charts for my weekly commentary rather than the usual daily charts, as originally a better picture could be seen and the context was also clearer. I noticed from the monthly charts a significant pattern that is still in operation, plus a possible second pattern that may have been forming. The principal pattern was the 2015 to 2020 bullish Andrews pitchfork, the market moving up in March over the middle time, currently at 39.04. The next pattern, the one that may still be in operation, if you ignore part of March's action, is a 2020 to date possible ascending expanding wedge pattern, currently 33.95 to 45.91. Now, I know you have to ignore part of March's action to still think this valid, specifically the breach over the upper trend line. But to be fair, on a monthly basis, whilst it has been breached on the upside, it still hasn't seen an outside close, not as yet. Hence, this pattern may well still be valid, though it is likely undergoing pressure on the upside very soon. All these patterns are labeled now on the daily chart. Here, you can see them now. So looking directly at the daily chart, you can see that the origin of the latest moves higher stretched back to a monthly key reversal made in December last year. Even now, I feel this is still worth highlighting, as this is the latest episode in moves higher seen since March 2021. So what have we seen recently on the daily chart? Well, we've seen prices punch up and close over consecutively the upper time, currently at 43.25 of the very significant but seemingly no longer valid August to October 2021 bullish shift pitchfork. This pitchfork has been showing the bullish angle of attack prior to the big attempt higher, made on that single day on the 8th of March, which is why I had still kept this bullish shift pitchfork on my daily chart. However, we've seen many now consecutive closes over this pitchfork, and it will be retired after this commentary. Instead, I'd now like to look at the recently drawn late February to mid-March more acute bullish shift pitchfork, specifically the upper time, currently at 45.90 3991, which is crossing right over right now the previously mentioned upper trend line of the ascending wedge pattern. These two, along with the previous all-time high back in November 2006 at 45.79, are the key resistances you can see the market will have to deal with if the rise is to continue. Meanwhile, and just in case, we have support in the 42.50 area and at the 2007 high at 41.64, as well as 41.24. But then nothing much until the October 2021 high at 39.44. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.